All right, ladies and gentlemen, I hope you had a wonderful day. We had another down day to start the year. We have the non-farm payrolls tomorrow in the morning, and it's getting pretty complicated, so there's a good chance the stock market is going to go crazy tomorrow. So I have the breakdown for you. We are going to go over the numbers. I'm going to give you my thoughts and ideas, but I really want you to pay attention of what we need to be looking out for, because like I'm saying, there is a very good chance the market could go absolutely wild, especially how we opened up this year. But if you have seen some of the other non-farm payrolls, unfortunately, it has been closely tied to other follow-up data, and there's also just as good of a chance that we kind of chill out and the market gets in this wait-and-see mode. So I have that breakdown for you. I have a couple of plays, but before I explain any of that, what I need you to know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. If you can't find the stream, all you got to do is press /live, and when I am live, it will take you there. But why am I telling you like this? Why am I showing you the channel so you could get a good look of it? Is because I will be live tomorrow for this data, and I will be live an hour earlier. Before the non-farms comes out, around 10 to 15 minutes prior, we will be live and going over everything. If I get any new information that I won't be able to update on the watch list, we will be going over that live. If you have any questions, especially after yesterday's video, man, if you don't understand anything or you got questions, maybe I said something a little too fast and I'm going all crazy, come ask me online, and I would love to show you live because it's very easy to do so. And like I'm saying, tomorrow is a big day. So I'll see you there in the morning. In the meantime, drop that thumbs up on the video. Make sure you're subscribed. And if you don't know, wait, I already said that. Run it, baby.
Walking to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, although we had a kind of wild day, there was a couple of events. You did even get some earnings out of Mobileye, which kind of affected the chip makers. We don't need to talk about yesterday or today. We need to talk about tomorrow because the non-farm payrolls is going to be the first big data event of the year. And like I was telling you, the other problem, or what's going to make this complicated, is that the CPI is next week. And ever since Powell and the market has been having tighter conditions, looser conditions, pricing in rate cuts, all of this stuff, everybody has been tying in the non-farms with the CPI, especially if the numbers come in line. Everyone's going to say, well, what are we going to get after that? So like I'm saying, it's going to be complicated, but beyond that, what makes this even more complicated is that this is the worst start to the year in terms of percentage declines since 2008. So why is that important? One, you could see the percentage-wise. So the way we're starting off this year, the last time we dropped any amount like this, it was 2008. A lot of similarities between now and 2005. Believe it or not, the last time the NASDAQ dropped more than 1% 2 days in a row to start off the year, it was 2005. But other than that, when you see how some of these years start, everybody keeps telling you about 1999. Well, there you go. The first three trading days, 1999, it was down almost 4.5%. So we're not quite there yet. But why I'm saying this, because it is pretty rare that you see the market start off in the first week of the year with only red days. Everyone's looking at how much did it drop? How much did the dollar and bonds go up? There's a lot of different factors to start off the comparison of the beginning of the year, but there's very few and far between where every single trading day of the first week, especially even in the next week, that you see the market go red. And that's why I'm saying this is going to be complicated, because every day has been red so far. It's like in a weird way, you know, like the roulette table, all I've seen is red, 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 red. There could be a chance we get black on there, but at the same time, you may not see that. That's the first thing that's going to complicate it, how we've moved. And like I've told you here arguably there's a more important data set next week with the CPI, and that very well can trigger the whole, well, yeah, we have a reaction, let's move around for a little bit, and then we just get back to doing what we're doing, and then we play this wait and see until we get more of the earnings and then the CPI next week. That is definitely in the cards. So that's how I'm going to start it here with you, and I will go over the numbers, but the first thing I want you to know, and I'll show you when I get to the chart here, it'll make a lot of sense. I think the numbers are going to play out like last time. And what do I mean by that? We're going to have slightly lower expectations from all the analysts and economists, even the Fed. If you read the minutes, people were talking about the labor market coming into better balance. That's why you keep seeing all these expectations come lower. And then I think the result is either going to be slightly higher or slightly lower, and it is going to come in at the status quo. This is my new word of the year, because every time we're like in line, it's at expectations and this and that, and I'll probably still use that, but for now, even if something isn't changing too much, even if it barely misses or beats, there's this general status quo of how things have been, and as long as that doesn't change, it's not upsetting everybody, and it's allowing them to go into that whole let's wait and see and then go from there. So with that being said, now let's jump to the data so you can see what I'm talking about. I might need to zoom in a little bit or you'll get a better idea. Here's the chart. This is what happened last time, but the answer is in the numbers here. At what we had in December, the forecast, you had one at 160, you had consensus at 180, and remember, I was telling you there was a range if you were keeping up with the watch list, and then the last one was 150,000, and then it came in at 199. That is what you are seeing right here. So what do we have for tomorrow? You have one low forecast at 150, consensus at 170. I have another number from FactSet that is saying 160,000. I do believe Bloomberg is around there. A lot of people are expecting this number to come down and the labor market coming into better balance, but you could see it's pretty similar to what we dealt with last time. And then if we get anything, 20,000 above, 20,000 below, it probably will trigger that wait and see reaction, and then we're going to just resume and deal with whatever we have been dealing with. So this is going to come out an hour before the bell. Like I already told you, we will be there live, but how does this get complicated now? I've already told you some of those other things, but you have a problem, and this is what I want you to look out for. I'm really glad that I made that video yesterday on options and expectations. Why? Because just like in earnings, if something comes in line and the market is kind of priced for that, or they price slightly above that to account for something where it just doesn't fall too much out of line, then you don't really get too big of a reaction. Usually your options don't play out. So how are we going to apply this to the data right now is because the way I'm looking at it, I think tomorrow is going to be a punt. If we do, in fact, get that number slightly above, slightly below, that is like coming in towards the expectations. It's not going to trigger a 2 standard deviation or 2 standard deviation move on the S&P. So why is this a problem? Because with the way things have been, how we've opened up, all these other factors, if anything comes in a lot higher than the expectation or a lot lower, either way, we will be prone to triggering a 2 standard deviation, maybe a 3 standard deviation reaction since it's the beginning of the year. But like I'm telling you, you do have that follow-up with the CPI, so maybe that will be the parachute that saves it all. But the reason why I'm saying this is because if we get too big of a drop, that means that the job market is tightening too fast, and there could be a problem with the economy, or people will start getting worried. That has been even the narrative from the Fed minutes that we just got. The Fed themselves even said if things in the job market drop more quickly, and they did say they're in a highly uncertain environment, that means things can get pretty negative, and that could create some sort of a problem for them. But on the other hand, if we get a big increase, it was the holidays, we're getting ready for election, a lot of reasons why it can make the number go high, even with some of the data, especially even ISM services today. If we get a big increase, well, that means the economy is way too hot right now for any of these rate cut expectations, and you still may get the market freaking out. This isn't kind of Goldilocks scenario because, like I'm saying, we're already dealing with negativity, so if it comes in line, it's not to say we're going to rip and say, oh, Goldilocks. Goldilocks. I don't know if that's the voice Goldilocks makes, but the general idea is too hot, too cold. They could cause really bad reactions. And then in the middle, it's kind of going to be a toss-up, especially if we do need to get some things more in balance in terms of what rate cuts have already been pricing in. That good data so far, bad data so far, it's not really caused us to move, but you've started off the year going down every single day. So that being said, I hope you're ready for tomorrow. If there is going to be a big move, it's going to happen in too hot or too cold, and it could cause a big one, but really at the margins, it may be a punt, and then before you know it, we're going to end the week. Maybe it'll be 5 days down. Maybe we get a participation medal and get a little bit of green, slightly above break even, and then we start punting into next week, get a couple of the bank earnings out of the way. Then you have CPI, and then the bigger banks, and then the tech next week, and then before you know it, it's going to be Powell, and hopefully we'll get a better idea of where the year is going from there. So on that note, I do want to leave you with one more thing, one little tip, and this is going to work until it doesn't. So I want you to pay attention, but the one thing I've been noticing about this weirdness with the market, regardless of what has been happening with the data, in the short term, I think the dollar is the answer. Quite simply, if the dollar goes up, the dollar has gone up every single day so far. It's doing a move like it did in 2005, and that was a negative start to the year, a really negative one. Well, if the dollar goes up in this case, I do think the markets won't like that, and we will go down. But however, if we do get data that could shoot the dollar down, or we even just see the dollar kind of chill out, I think that would allow the market to hold up, or at the very least, not sell off every day and add to this awful start percentage-wise to the year. So in my mind, I want to say this will last only until earnings in Powell, which is right around the corner, but this will last until it doesn't. But this is definitely a big factor to start off the year that I don't see everybody talking about. It gets brought up in the conversation, but you could really see its pervasive effect in the terms of dollar strong, we ain't doing nothing. Dollar weak, anytime, even intraday, when the dollar's a little bit weak, we like it, but then right when that reverts, you going right back down. So keep that in mind. I hope you're ready for tomorrow. I hope I see you there, but now let us get into the plays. So right off the bat, I got a couple of different plays, one related to the data, one not related, and then one very, very broad that I've been in for a while, and I could even give you a long-term update, but let's start with it, man. The first play is Baidu and Baba. I did add Baba to the long term yesterday at 74.60. I grabbed 85 shares in the big account, 8 shares in the small account, and then I grabbed 2 shares for Colt Sister. So I am holding that for minimum 10 years, and I like it there. We don't have any foreign exposure in the long term, so thought it might be time, and they're at like a 3-year low, even down, I think, like, 30% from like last year or the end of last year or something like that, but I really like it. It has value. It even offers a little dividend. It's like 1.3%, but I did add the Baba, and then Baidu. You guys have known I've been holding that. I made a play in August, I made a play in November, and then I averaged down big in December, and that has already gone up. I'm a slightly above break even on 500 shares in my flip account, but the thing is, the way I'm looking at all of this, even with China moving forward, depending on the data, earnings, Powell, and all that for the rest of the month, I think China is either going to have a recovery, we will get surprised, or people will start pumping it, or if we start doing really bad and hard landing really starts to reemerge and appear, then I think China will start doing good. Why? We do good, China goes down. We do bad, China starts going up. They will pick up this slack. And if you think about it, how many times have you seen beaten down names? If the market really starts dumping, even the big tech, money starts to flow into those heavy underperformers. It's literally been that outperformance we've even seen at the beginning of this year and the end of last year. So that's why I like it. If anything, we're just waiting on the Wall Street pump train. Once Wall Street gets involved, just like last year, it was down for a little bit. Everybody was still worried. Then everyone's like, it's the best trade of the year. Morgan Stanley said it's 120, and then it just like goes down right away. So you will get a little bit of mania at one point is kind of what I'm expecting, but maybe it doesn't happen, maybe it does, but I really don't think people will resist the China plays much longer, especially depending on what happens. I don't really see too much of a world right now where in the early stages of us doing bad, China starts getting worse. Maybe they'll get a little bit of a bid. I'm not saying this will hold up permanently, but in general, I am looking for an opposite reaction between China stocks and our stocks to a degree. So watch out for that tomorrow. Maybe we'll get a signal, and even then, the last couple of days, these China plays have been holding up. So watch out for that. That is play number 1. Then play number 2. This one, you might be able to get something out of it tomorrow, depending on what happens. But if it's in the middle or everybody wants to do the wait and see and wait for CPI, well, be careful if you get time on this play linked to an option. It may be a little bit more dangerous, but there has been some pretty big volatile moves in bonds. So I have TLT up here as the play. That is for the ETF. But if you could play /B, I think that is a better alternative. If you trade futures, you will have to leverage more. It could take bigger losses, but you'll get a little bit more flexibility. Or think about TLT shares. So there will be a couple of different plays depending on the results tomorrow. I even said this yesterday. If that number comes in too low, I wouldn't be surprised that if we have a really big miss to the downside, although you would think that's good news, again, market will probably freak out because that means we are getting into a quicker recession. I would actually expect TLT and the bonds to catch a bit off of that, but beyond all of that, I just want you to understand this, especially as we interpret data coming into the beginning of the year. Just don't forget this whole thing I told you at the beginning of December, like middle of December, when things were moving a little bit. Don't forget this whole concept that 4%, that's the soft landing. Anything lower, that is going to be screaming hard landing, and maybe we got a recession. And then anything above that, that is just slightly more tighter conditions. This is something that we've been going over here, and you could really see it. You know, everybody was getting really, really overhyped. Yields dropped below 4%, and now as things are kind of pulling back, people giving up half of the gain since Powell, you're noticing we're hugging right there at 4%. As we're about to get into data and earnings, I think the market is using this as a gauge, and a lot of people are even bringing this one up by now. So keep that in mind. That is play number 2. And then finally, play number 3. It's related, unrelated, but it's kind of its own little phenomena. Biotechs and healthcare. I have IBB. I have a play on those options. And then Humana, we talked about that one. I still have those shares from the Cigna news. I'm down on them, and I told you I was expecting a big run-up. Well, beginning of the year, we are watching that in a lot of these plays. These have been the outlier outperformers to start the year. If you haven't seen the IBB or the XLV, you'll go look at their charts. They kind of look like everything else, but recently they haven't taken the same drop down as like KRE or any of those plays. It's actually quite fascinating. I believe in the last 2 days, it's even one of the better outperformances against SPY, NASDAQ, and a lot of things since 2005. Once again, one of those statistics. So with that being said, I would just watch out for this because regardless of what happens, they might be in their own little world, and you should be watching for how long this continues or pretty much when this phenomena stops. So we have a play. We got some exposure to it, but as you see here, this might be an area to look at, and I believe end of first quarter, even at the end of the month, there's a lot of different biotech events for really big biotech companies, and they could cause some big moves. So keep your eyes out for all of those. As far as everything else, believe it or not, man, by day number 3, I did not make a play today. We riding out plays. I got the exposure by Do. We did add to the long term. We closed out of that oil play that I was talking about. I closed out the next day, literally 30 minutes in. We made like $2,000 on it, but I have no other plays. I'll wait for tomorrow, but I'm not going to force it, and I will be using the dollar as a guide, and then there's other areas where we could be focusing on, but get ready for the data. We'll handle it, take it as it comes, keep a little bit of a vision out for the future because we have so much on the way, but Chad, that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember, you ain't afraid of them. They afraid of you. Baby. Have no fear and raise those expectations, Chad. It's a new year. Hope above apathy all day. No matter what you do, nothing will happen. No. Watch. Try your hardest. Something will happen the moment you believe it. But, Chad, I love you. God bless you. I will see you in the morning, bright and early. I will see you tomorrow. Drink that water. You better stay. Get good sleep. And drive. Horn.
So Mike Wilson is with us. Every quarter you come on, regardless of what's happening. Your work is extraordinary, as we've said. Dan mentioned you just got voted again #1 in what? What is that thing?
II, #1.
Which is remarkable because you know why? That's your peers that vote on that, and they obviously think the world of your work, as do we. So as we sit here with the S&P 45, 50, thereabouts. It's surprising me. Where do you sort of gauge things right now? Because I know your thesis hasn't changed. And quite frankly, all the things that you thought would happen are actually getting
people that thought it would be a lot lower. They are far from that number if you think about it there. So that's almost 100,000 miss on the most bearish of estimates. But let's see. Nope, it's not updating. Come on. Oh, no, they updated it. Wow. All right, December. Total non-farm payroll increased by 216,000 in December. Unemployment rate was unchanged at 3.7. So again, some people thought that could have went to 3.9. Euro's Bureau of Labor Statistics reported unemployment continued to trend up, and the government, healthcare, and social assistance and construction, while transportation and warehouse lost jobs. Seasonally adjusted household survey, the unemployment rate held at 3.7, and the number of unemployments was essentially unchanged at 6.3. Let's see. Establishment survey 216. Employment continued to trend up in government, healthcare, and assistance. Payroll employment rose by 2.7 million, an average gain of 225, less than the increase of 4.8 million in 2022. Average monthly gain of 399. Government increased by 52,000. Healthcare increased by 38,000. Healthcare services 19,000. Hospitals 15. Job growth in healthcare averaged 55 per month. Employment and social assistance rose by 21,000. Construction employment continued to trend up with 17,000. Employment in transportation and warehousing declined by 23,000. Couriers and messengers lost 32,000 jobs, while air transport added 4,000 jobs since reaching a peak in October. Employment, leisure, hospitality changed little, positive 40,000. The industry averaged about 39,000 a month in 2023. In December, employment professional businesses changed little. Employment. Let me get to wages real quick. Average work week for private payrolls edged down 0.1 hours to 34.3. And let's see. Revisions for seasonal adjusted. Where's average hourly earnings? So average hourly earnings, that actually went up a little bit too. So honestly, I think it's overall pretty bad. Again, people might be able to brush it off because the 220 is not too high, but your other things are bad, and I'm glad you brought that up there. If the dollar is going to hold up heavy off of that, then we're going to have a problem more likely. That's kind of been the theme here of the day. So let's see what we got here so far. So again, manufacturing up 6,000. 2-month payroll revision shows a 71,000 reduction in gains. So the net level of payrolls is almost a wash relative to the median. So do you guys get what was just said? So if you go look at this chart from the watch list yesterday, it's going to look different because this number was at 199. They lowered it to 173. So again, this is where we're going to get a little bit of interesting. So they're saying if you take the last two, again, this is already instantly. People are already saying this right now. If you take the last two job revisions and how they lowered it today, that accounts for the miss that you had to the upside. And like I was telling you, even if it's within like 130,000, everybody's going to react a certain way. So very, very interesting there. The ZQ drop, that's good. Yeah, actually, wow, it came down a lot. So let's see if that actually figures itself out by the end of the day. My goodness. Non-farm payroll up good. Good is bad, bad is good. Honest, it's a wash. So that's the interesting part again. But this is like another month in a row of everybody kind of getting weirded out, or again being absolutely wrong. Oh, gold had a good drop, 2030. So again, 2020 would be the most ideal price. We'll see if it gets there. But some things are already bouncing right here. But again, people are looking at there. I think the bad part is wages on top of it. So not only is the job market a little bit stronger there, but the wage gain is also coming up there a little bit, which is interesting. The 2-year yield is up. Again, yields should go up. They're already down by 1% on TLT. The revisions are a damper, but these numbers suggest job market is holding up better than expected. For all the forecasts about a recession in 23, what we got is a labor market in December that was as solid as ever, with payroll gains actually accelerating, not slowing. This surely dims the prospect of Fed lowering interest rates as soon as March. Those like Goldman have penciled March in for first reduction may need to reconsider. Swaps of March rate cut are now back to 50-50 on the odds. So again, let me get you a little bit more here. I went over the brief rundown, honestly. I didn't go over the specifics. But again, like even the areas that warehouse was the only thing weaker, but everything was good. Wash is Goldilocks. maybe, I guess, if you want to. I mean, but think about it. The last two reactions, people viewed the last two as a Goldilocks, but now they got lowered. And remember, the worry for the bearish side right now, especially after the Fed minutes, is the real question. If you want to know hard landing or soft landing, you really got to be asking yourself one question: is the labor market weaker or stronger than we think? Right? So again, we had these numbers here. It's getting revised lower, so that means the last 2 months were actually weaker than we were all previously digesting. And then now today, you get a very strong report. Maybe this one gets revised down later. That's unfortunately the problem. There's a seasonal effect. People are even comparing this to the whole pace of last year. Keep in mind, this is the last number for 2023. So people are comparing that number even to 2022. So very interesting to see. But if anything, again, I think you got a negative surprise on the number today. And then in a weird way, it balances out with the revisions. But payroll's going up. And just remember, about like a week or two ago, everybody was very, the way they were viewing the rates and interest rates and how things were going to play out in terms of the cuts. That has been the negative part for the most part. It's going to be a punt most likely, but we might get a negative reaction. Again, because I don't know if people want to focus on the downside revisions, that may spook them. And then also at the same time, beating by almost 100,000 for the lowest estimate. So again, we came in at 220 or something. But considering where some people were, it's kind of wild. Let me see. Yeah, we came in at 216. So the lowest, again, people like Bloomberg, I think Goldman was a little bit lower too, but if you have 216 and you were expecting 140, that's 70, 80,000. And again, I was telling you earlier, though, there's a lot of people out there with how spread out some of the ranges have been. There's literally been people saying that you could be off by 130,000 jobs and not necessarily have a reaction. But for the most part, I definitely think this with the nature of how everything's played out, I think we have a slight bearish tilt. However, like I said about yesterday, we've been down for 5 days in a row if this one is going to close red. So maybe we get a little bit of luck and we see something else show up on the roulette table. But for the most part, I would be punting until CPI now and then the earnings. But for the most part, there's definitely a slightly negative tilt to all of it. Again, long-term unemployed for those jobless of 27 weeks at 1.2 million was little changed in December. So Priya Misra, JP Morgan said a strong jobs report and large rate reaction makes sense given the move after December Fed with the market focused on rate cuts. A key factor here is the upside in wages, Misra said, and that strength in wages and drop in participation will make the Fed hesitant to cut as early as March. Sadly for the Fed, the labor force participation rate has declined. This is discouraging. The previous narrative had that the job market was so hot it was pulling people into the labor force, but at 62.5, the rate has slumped to the lowest level since last February. The participation rate dip is noteworthy and does run against the narrative of strong job market, proving to be a rising tide that lifts everyone. Given we are in election year, it will be worth watching this figure in the months ahead. This surely dims the prospect of Fed lowering rates in March. Those like Goldman will have to reconsider. Unemployed part-time for economic reasons at 4.2 changed little. Number of non-working. Again, that's for the household survey didn't even change. So that's another factor there. Again, if you guys remember the last couple of times, household survey was moving, but it was unchanged for the most part. Essentially unchanged at 6.3, higher than a year earlier when the jobless rate was at 3.5 and unemployed was at 5.7. Because wages are rising, few people are joining the workforce. The Fed may wait longer before considering any rate cuts. Yeah, you're getting it's honestly, in a weird way, this is kind of like the March rate cut rug pull. So now everybody might focus on May, but for the most cut, the rate cut odds for March are not really they're not really hitting like that. Chief economist Anna Wong says the unemployment rate stayed at 3.7, but for the wrong reasons. It's due to a drop in labor force participation. Fed wants to see a labor supply increase, providing an impulse for continued wage disinflation. The road to durably returning to inflation to a 2% is going to be long and bumpy. So, again, I don't know if you guys already sensed the attitude, but, this already sounds a lot different than what you've been dealing with in the last, month. Does that make sense? Again, you had every crackhead in the world go from, 5 rate cuts to 7 or 9 rate cuts, you know what I'm saying? But you definitely are, again, everybody's attitude right now, again, even Anna Wong there, like I'm saying, that was the Bloomberg analyst who went to 140, and she's usually been correct over the last course of this last year, but for the most part, a lot of people were getting excited, Nick Timmerhouse and all these people, again, hyped up by rates, but for the most part, you are getting this general pushback now. They're like, all right, maybe it's not going to happen in March now. All right, maybe you're right. Or maybe at 50-50. What? Gregory Farinello, head of rate strategy at Amerivet, says this number fits our view of consolidation in the rate market off the backs of the move in late 23 and the data to start 24, pushing back on the notion of imminent cuts. So what he's saying is this is recessionary. So he's saying that this is he's pretty much saying the job market is deteriorating faster. And that's something you got to keep in mind of what's going on there. But that's what we'll have to see. That one's going to get really interesting. Yeah, we're going to go over MPW later. Everybody's asking about it. I think it's bad, but it's also in line with what I've been telling you with management. Over the last couple of earnings, it's kind of been shady. But then again, you already see the chat. I'm going to get asked about it every 10 minutes. So I'll give it to you guys at after the bell rings maybe. We could cover it maybe pre-market. But then again, I'm sure we're going to explain this several times today. But as of now, I'm still kind of mind-blown about both the revisions and now in a weird way. Let me ask you this. Do you guys think this is recessionary or not? Because that's, again, so right now, that latest quote I'm reading you, some people are again, you have some people saying, all right, maybe they're not going to raise in March, but after the revisions and this, some people are viewing this as kind of the first crack so far. And they're saying this could be a little bit more recessionary. Honestly, even wait for your boy Nick Timmerhouse. Let's see. So median duration of employment up to 9.7 weeks, highest since 2021. Some 840,000 people left the labor force in December. In other words, they were no longer working or looking for work. That's why the participation rate slid by 0.3, the biggest drop since January 2021. It's very hard to understand that one, really. Let's see whether economists can come up with an explanation. So legitimately, they're saying they can't even answer. There's almost 1 million people who stopped working, and we don't know why. And then again, you still had the rate of change increase. That's the irony of all of it. So the people who stayed employed, and then you had people leave, and then you had the unemployment rate pretty much stay unchanged, dependent on the participation rate, how many people were involved. So there's some nice size and scope of the official release that puts context on the pace of government hiring. Government employment increased by 52,000 in December, driven by 37,000 in local government, 7,000 in the federal sector. Bureau of Labor Statistics notes that the government added an average of 56,000 jobs a month in 2023. This is more than double the average monthly gain of 23,000 in 2022. People leave jobs during the holidays. It makes sense. Could be, but they weren't looking for work or anything else. It's a big number, but maybe that's going to get people scratching their head, though. But above all else, again, this is just, you notice we're down, but we were down a little bit more to start off the morning. Again, Fed futures, they got clobbered, but Fed futures are kind of even stabilizing here. Like I said, I'd watch the dollar all day, but just keep in mind this was a little bit shocking. But you also have it to the point where it didn't tip the scale too much, where, again, we might kind of do nothing and trade how we were trading. I'm definitely thinking punt. I think we got to learn a couple of things, and you got some new info. But I still think the special teams is out for now. And then again, by special teams, I think we wait till next week, and then we find out if the pressure from the last couple of days is going to take over or not. Yeah, there is ISM and Barkin. But again, I'm sure Barkin, any of the Fed speakers, they're going to use this to push back the rate cuts. Again, that's all this has been. Remember, everybody went too ape shit on the rate cuts, and then this last 2 to 3 weeks has been the pushback, and this may be the dagger, or at least probably the CPI will be. Has there not been a revision in the last 36 months asking for a financial advisor? I'm not a financial advisor, sorry. But there has been revisions. There again, the last 2 months just got revised. There was revisions on the last months prior, but they were very minimal, about 20,000. Again, if literally the last about 4 to 6 months, it's honestly it's a fucked up game. I mean, you would think it was Enron who works at the Bureau of Labor Statistics, because every time the number comes in higher, the revisions of the last 2 months are almost equivalent to the surprise. That's what happened here. So again, we beat by what? You went up by I think 40, 50,000. That's pretty much how much you got revised over the last 2 meetings. So again, if you go watch yesterday's watch list, you'll see that when I showed this chart on the watch list, these numbers for October and November were different. So again, this number was 199. They revised that down by 20,000. So think about it. We beat by 40,000, revised this down by 20, revised this down by I think 10 or 30. And then you're just about the amount that you beat, you got revised lower. But the thing is, again, right now, the thing that people do not like is that even if you want to mess and fudge with the numbers around just the actual release and what's expected, it doesn't change the fact that, again, participation rate is dropping. And then once, like I told you guys, once you start getting in a trend of revising negatively, what are some people going to start thinking about? They're going to start thinking that, oh, well, pretty much if the numbers are starting to get revised now, the labor market is weaker than we expected. And if it weakens faster than we expect, then we're going to have an issue there. Again, yeah, pretty much the more they revise lower and the bigger they revise lower, you could start saying the R word, and R is for recession. More than half of the increase came from education, health and leisure, and hospitality. Both categories have continued to recover the loss of momentum caused by pandemic. In the case of leisure hospitality, the level of payrolls remains below the peak that it hit in February 2020. The labor data generally ran hot with a few caveats. Headline payroll growth of 216 comfortably bested expectation, but there was a downward revision by 71,000 to the prior 2 months. So literally, we beat by 170 to 216. You beat by 70,000, and then you revise lower by 70,000. It's honestly kind of a joke. It still shows the chart. Unemployment rate duly surprised by remaining unchanged at 3.7, but they admit that have been a function of lower participation, which unexpectedly dropped from 62.8 to 62.5. Household employment actually dropped by 683,000. The unemployment figure would be a little easier to take at face value had participation remained steady. That being said, the higher wage figures are consistent with tight labor market and ultimately provide the most direct transmission into inflation. A further recalibration of the Fed is therefore likely warranted, as the sum of messaging from this report does not suggest that a March rate cut will be either warranted or likely. All that being said, markets have a funny way of doing surprising things on payroll day, so betting the farm higher yields to extend further this morning may not be a terribly good idea. So again, I don't know if you understand. That's a macro man from Bloomberg, Cameron Kreis, but literally, even then, they're kind of saying don't short the bonds necessarily, but today was a surprise, and you're definitely not getting a March rate cut. We got to see where's Timmy, bro? Timmy, can't you see? Sometimes the rates just hypnotize me. I just love the March rate cuts. This is how you know that it's a fade. Okay, steady as she goes. U.S. economy at a 216, and the unemployment rate held steady at 3.7. The unemployment rate for October. Yeah, Nick Timbrowse didn't say anything. He just said the jobs report was steady. He tweeted that 9 minutes ago. He said, bet the farm. Sorry. Let's see. Bloomberg's Economic has flagged the upside risk for the December jobs report. Solid job openings, limited jobless claims pushed up the payroll forecast in recent days, something that may not have been captured by the consensus. Interest rate futures now show a 56% chance of a March rate cut. That's down from 63% late yesterday and 84% a week ago. A notable reassessment in the market. It'll be interesting to watch how stocks fare in today's session. The S&P was poised to snap a 9-week winning streak. Steve Snoznik of Interactive Brokers. Today's numbers are a reality check for those who are banking on 6 rate cuts this year starting in March, and a stock and bond market that had a ferocious year-end rally based on those themes. We can quibble about the 2-month revisions and the labor force participation rate, but a beat in monthly hourly earnings is undoubtedly unfriendly to an aggressive rate cut narrative. Amen. Timmy flip-flopped like everybody else, kind of. He was very bullish all up until the calendar changed. And then he started talking about the doubt in the market, more or less. So we will see. All right, Chad. All righty. All right, well, hold on. I got to get some stuff set up for you. I think that's it, though. As far as how the market's going to move, it's going to be difficult. I think we do got a bearish tilt, but I do think this is the punt into this is going to be your punt into CPI and earnings next week. Fortunately, unfortunately, big tech might get clapped, but I would say watch if rates go down a little lower. But definitely today is kind of about throwing March rate cuts in the trash. I don't know. Can we all agree? Again, that's everything we've read so far, and again, the data is a little stronger. But like right now, the market is already repricing. But I definitely, whatever the market does, however it wants to move, I do think right now the main theme is everybody is throwing away the March rate cuts, barring anything else that happens unexpectedly that is recessionary. But if you're not going to have a hard landing, a black swan event, everybody is taking March rate cuts, and they're crumpling it up, they're stomping on it, and they're throwing it away right now. But it's still about 50% or a little bit, or it's like 50-50 borderline. So, very good. Very, very good. Very, very good. But I will be right back. Follow me on Instagram at The Trading Fraternity. We still got to get the day rolling. So like that video, man, and get ready. I still got to get you the news. We're going to have a lot of things. We're going to have a lot of things, baby. So good morrow. Good morrow. I'll be right back.
And not proceed as quickly as they need to remedy their problems.
Bill, fantastic column that came out from you earlier this week. Appreciate it. Bill, I just wanted to squeeze one further question in, if I can. Bill, you've been ahead of the curve big time on how far this Fed would have to go. Do you think there is still a risk that they have to move again, that another hike could be in our future?
I think it's pretty unlikely. I think that the bar to raising rates again would be, they have to totally reevaluate their whole framework. I think more likely story is that if things turn out to be stronger, they'll just keep rates higher for longer before they actually start to reduce rates. So I think the bar to raising rates again is pretty high at this point.
Bill Dudley, thank you, sir. Appreciate it, and Happy New Year to brilliant Bill Dudley, former New York Fed president. Mike McKee has had about 23 minutes with this jobs report. He's got more to say. Mike McKee, some final thoughts from you, sir, for this hour at least, going into the opening bell in about 37 minutes.
Yeah, there's some interesting aspects to all of this, John. The wage number obviously gets people's attention. And when you look at the gains in wages, it's kind of across the board. Mining up 0.5%, manufacturing up 0.5%, durable goods manufacturing up 0.7%, service providing up 0.5%, retail up 0.8%. So everybody was getting raises for the most part during the month of December, which is kind of interesting. But then the idea that maybe we're seeing a slowdown and things are going to get worse is belied a little bit by the unemployment news, because when you look at the categories of unemployment, white unemployment rose by 0.2, but black unemployment fell by 0.6, Asian by 0.4. So you're looking at the people who usually are last in, first out, and you would expect to see their unemployment rate go up if things were getting worse. They're not for them. So it's kind of an interesting situation that it kind of leaves you still scratching your head about where we go from here.
I think we've been doing that for a while. Mike McKee, thank you, sir. Fantastic job this morning, as always. On the surface, things look decent. Beneath the surface, Mike McKee says things look decent. Let's get you set up for the opening bell in about 36 minutes' time. Equity futures pulling back just a little bit, but recovering. We're down by about 0.2% on the S&P 500. We've been selling off all week on the S&P 500. 4-day losing streak on the S&P S&P, 5 days on the Nasdaq. Yields a little bit higher this morning, up by 5 basis points, 4.43 on a 2-year. To get you ready for the opening bell, Gina Martin Adams, our chief equity strategist for Bloomberg Intelligence, joins us right now. Gina, good for the economy. Is it good for the equity market? What's your take on that?
Yeah, the equity market is unfortunately in a bit of a sticky spot here to start 2024. We've been in a corrective process from an overbought condition where we ended 2023. So the backdrop headed into this report was not particularly conducive to gains for the equity market to start with. And then I would suggest the report is likely to have mixed results on the equity market. Remember, the consensus view is for slower growth and slower inflation headed into 2024. So while this is definitely a positive sign for growth, it's also a potentially inflationary signal with the wage numbers that were significantly above expectations, still above the 3.5% bogey that I think the Fed is watching on wages. So that mixed result is probably net negative for the equity market, considering the backdrop.
Gina, moments ago, Atif Malik at Citigroup just pushed against the gloom on Apple. He said his channel checks are good. He's got a 27% total return on Apple out. I don't want you to speak specifically about Apple, but I want to speak about what I've talked about all week, which is the acclaimed Martin Adams optimism on earnings growth right now. What does the Gloom crew get wrong?
Well, I mean, I think, frankly, the expectation embedded in markets is far too bearish. I mean, as much as the consensus is saying we're likely to get about 11% earnings growth, our macro model says that the market expectation is closer to 0% earnings growth for 2024, which would be nearly unprecedented considering that earnings fell a touch in 2023 to have 24 months of negative earnings growth on the S&P 500 as inflation is decelerating is a really tough call to make, but that's what's priced in stocks. And this is what I mean when I say growth expectations are very, very low. No one is expecting acceleration in GDP growth, nor is the market apparently expecting much acceleration in earnings growth next year. But if to the degree that you are optimistic about earnings, you are somewhat reliant upon the inflation deceleration continuing. Where we get some degree of earnings optimism is not that we're expecting a remarkable recovery in revenue growth, but that margins are continuing to improve because inflation is decelerating. Companies are becoming more efficient. They're continuing to cut costs across the board. They're generally very lean and ready for any incremental revenue improvement. So you have a lot of upside potential surprise on the growth line. I just don't think that the market is expecting anything there. But you also have some potentially stickier than expected inflation, which could scupper the view a bit.
Gina, just real quick here, how much does the wage gain that we just saw in the unemployment or the employment report really challenge that margin question?
Not much, Lisa, because wages are only a small percentage of overall operating margin changes in the S&P 500. Where we're getting the greatest degree of our tailwind is because import prices are falling, producer prices are falling, and that's allowing companies some degree of pricing power. We've not had much net improvement in wage over the course of the last 18 months. So I would certainly love to see deceleration in wage growth as a component of potential margin expansion for companies over the course of this year.
My goodness. Sebastian Janikowski. He's a kicker, but I think we should get the punters out here. So again, I'm already getting a lot of news. We already got a lot of headlines. We've gone over it, Chad. I'm going to have the breakdown for you. It's going to be an interesting day. Again, this is the last day of the first week here, and we've already made a lot of different moves. But Chattadonia, what's up, baby? How you living, Chattadonia? What do you got for me, man? Good morning. We got to get the day started. Now it's back to normal scheduling. We have the event out the way. It's practically unchanged from when the data came out. But good morning. What up, Awaz? What up, Ansel, Smars, Cam, Jose, Zuraj, Zitz, Backward, Candy Upton, Kurt McGirt, Smars, you feel me? Tazzy Wazzy, baby. Adrian, Michael, Kevin, good morning, baby. What up, Ansel? What up, Sungrown, Benny Silverio, Devonso, Monica, Sungrown, Yee, Solar, Samuel C, Tasty STI, Raider, baby, Ben Storm, Rogello, Jamar, we got Miami. Good morning, baby. What up, Disney? What up, Candy? How you living, Ghost? How you doing, Khan. What up, Mr. S2K, Mr. J. Cole, Joshua Harris, Ty Reed, Untamed, Sarah Sosa. Good morning, winning loser. Ari in the house. Oh, what up, baby? Ryan Scarella, Isaac, JSK, Jason McCoy, Parth, baby, David L, Sean Burke, baby, K, Gunner, Lucky Soldier, Bruce B, the Tiger Man, Alaskan Assassin, Artemis, Starbucks. Oh, my goodness, man. I love it. Starbucks. Artemis, oh my gosh, Agent of Chaos, Steve Delaney, BK Broiler, RJGI, baby. Say Kyle, baby. What up, Kyle? I say K, man. I just said K. What up, Kyle? How you living? Dakota, Jeffrey Powell, baby. Neurosci, John Wayne, Straw Hat, KS. Is that Kyle S? Skate to Escape, baby. Ibrahim, Daniel, baby. Your non-attorney spokesman. Good morning. What up, Nightbot? What up, Vinny Mac? How you doing, Rotary, baby? What's going on, Sean Moose? Edward Kirk, baby. PR787. Youngblood in the house. Miss Chantel in the house. Let's go, baby. Bowstring, Falcon Fear. Good morning. Oh, what about the Twitch, baby? What about Ibex, T-Toxie, Mother Liquor, Robo Handtag, Braxton, Pinelander, Kamul, is it Kamul, Lizzie, Clout Chaser, Charlie and the Tree, baby, Stacy Racy, Rihanna, baby, Angelus, 12 Jimin, baby, S. Jones X, KJ Lemur, Big Curly, Most Dope, Andy, Smeely Donk, Mr. Glock, Z Destroyer, Big Curly once again, LV Lover, S. Jones Jax, and Braxton. Oh, I might have missed a couple. Oh, what up, Cholo? What up, RT? Oh, what up, Ghostlaw? There you. What up, Pinelander? There you. I just have to scroll down a little bit. Good morning, baby. If I missed you, you weren't banned. Don't worry about it. And I saw your questions on MPW. How about on the top of the hour? I think we're going to have enough time. I'm going to cover all the news. We'll talk about MPW before the market starts. And then at the top of every hour, I will answer MPW because everybody's going to ask me a million times, okay? But I got a good update for you. It's simple, but it's not good news. You're not going to like what I have to tell you, unfortunately. So we'll get to the bottom of it. But Chattadonia, I hope you are ready. I hope you are feeling good. Again, you already got a lot of wildness here to start. And are we up? I think we're up from the release now. Oh, man. Maybe the crackheads come out. But again, remember the last couple of days, we have seen a lot. But let me get you the news. Man. Let's see what we have here. Are you ready? Mm-hmm. You ready? Stocks and bonds slump finds fuel and payroll surge. Stock futures declined and bond yields climbed after jobs data fueled fears that wagers on the Federal Reserve rate cuts may have been too aggressive. S&P 500 contracts slumped by 0.2 while the yield on the 10-year jumped to 4.06 after non-farm payrolls rose by 216,000, a larger than expected gain, and the unemployment rate held steady at 3.7% in December. The dollar spiked higher. Swap traders trimmed their rate bets and are now pricing in about 13 basis points of easing at the Fed's March meeting, down from around 16 at Thursday's close. It was another better than expected payrolls print that affords the Fed plenty of flexibility to delay the cutting of rates in early 2024, said BMO Capital Ian Ligon. The payroll number is quite robust, according to Vital's knowledge Adam Crisafulli, while hourly wage growth ran hot and participation rates sank, all of which suggests markets are far off the mark in terms of what they're pricing in for the Fed 24 easing. Investors are backtracking on some of last year's most popular trades. Futures on tech-heavy NASDAQ slid by 0.5 on Friday. Citigroup strategists recommended buying global stocks at times of weakness and said don't chase rallies as this year offers less upside than 2023. In corporate news, Tesla is trading lower pre-market after recalling virtually every car it's ever sold in China over issues with the driver assistance systems. In China, shadow banking giant Zhongzi Enterprises filed for bankruptcy. Downfall marks one of China's biggest ever corporate collapses, putting more stress on an already fragile consumer investor sentiment. Factory orders in ISM services are up next, and Richmond Fed Barkin, a voter in 24, is also going to be speaking today. Ba-da-bop-bop-bop. Let's see. Options bet. The option market for U.S. Treasuries was abuzz yesterday following the emergence of a large bearish wager that today's jobs report will trigger the biggest backup in benchmark yields in more than 9 months. The trade suggests a surge in U.S. 10-year yields as high as 4.1 by close of business today, or a jump of 0.15 percentage points from Thursday's closing level. That would mark the biggest one-day rise in 10-year yields since late March and a further retrenchment for Treasuries, which have already had a rocky start to 2024 after a 2-month rally at the end of last year. Market jitters. Markets continued their partial retrenchment after December's strong performance ahead of today's jobs data. As the speculation builds that resilient labor market may delay rate cuts, sentiment has weakened by late dip in Wall Street overnight as U.S. tech stocks posted their longest streak of losses in over a decade. The tech-heavy NASDAQ fell by 0.5, extending losses to a fifth day, its longest slide since December 22. 10-year treasuries extended declines with the yield rising above 4, and European trading stocks resumed their declines and bond yields edge higher as investors look to the jobs data to gauge the health of the U.S. economy. Credit crunch. It's also a gloomy start for credit markets, which have seen hundreds of billions of dollars of value wiped out in the worst cross-asset sell-off to greet a new year in decades. The combined value of high-grade and junk market has shrunk by about $240 billion to $13.6 trillion, the lowest since December 13. According to data compiled by Bloomberg, the drop in the market value was exacerbated by the rebalancing of bonds underlying the index at the end of the month. That said, the bad start is only into a fraction of the gains that recorded in the last 2 months. In late October, global credit market value stood $1 trillion below its current level. China conundrum, tearing ourselves away from jobs data. There's a spate of news out of China this morning. China's shadow banking giant Zhongxi Enterprises has filed bankruptcy, saying it's insolvent. This follows a criminal investigation into the shadow bank's management business, which had extended financing to troubled developers and snapped up assets from companies including China's Evergrande. Meanwhile, the sentiment towards China's economy, as depressed as it is, the risk premium of China's stocks has reached a level that historically leads to spectacular returns, according to one indicator. The country's stock is sinking to the bottom of the global ranking in the first week of 2024. Further muddying the waters, President Xi Jinping has also been causing some confusion with a cryptic economic slogan. What is the slogan? Let's see. High quality development. China's pursuing high quality development. That is the quote there for your boy. Oil going crazy, bro. I can't believe we're already up right now. So technically, you have a gain of like almost 1/3% since the data has been released. Let's see. Did gold come back? Oh, wow. Gold came back? No way. I don't know, man. It feels like the crackheads are out here, but wait about 30 minutes, an hour after the bell. But for the most part, you are going up there. Dollar dying in Japan, yen going up. It looks like everything else. Yen is still pretty clobbered here. But again, the dollar did chill out a little bit, but it's still up on the day. That's what I'd kind of be worried about. Very, very interesting, though. Getting some movements. So SPY futures were down 0.3, coming back almost to break even Friday morning after U.S. equities finished mostly lower on Thursday near the worst levels. NASDAQ down for a fifth straight session. Oh, no, down 5 for a fifth straight session. NASDAQ down for a fifth straight session for the first time in over a year. S&P, NASDAQ on track to snap their 9-week winning streak. Treasuries weaker across the curve as backup in yields to start the year continues. Dollars up by 0.2 on broad-based strength. Dollar yen down by 3 this week. Gold down by 0.8. Bitcoin futures off by 0.7 and WTI up by 1. Big market on above consensus read for December payout, rising 216,000 versus street expectations in the 170 to 175 range. In October and November results revised down while unemployment rate held firm at 3.7. As expected, solid gains in government, healthcare, and leisure and hospitality. Average hourly earnings a bit hotter than expected. Recall previews had flagged upside risk to payroll growth from seasonal factors and warmer weather. Also highlighted positive read-through from initial claims. Equities reacted negatively to the report, but unclear that the release does anything to shift the Fed calculus for rate cuts beginning later this year. Note the ISM service reading also on today's economic calendar comes out at 10 Eastern. Path of least resistance has been lower to start 24. Blame still largely chalked up to more technical factors like overbought conditions and stretch positioning rather than any meaningful shift in the fundamental narrative. However, some thoughts the market has been too aggressive with Fed easing expectations. Some skepticism surrounding the consensus for a 12% S&P EPS growth in 24 in the face of disinflation headwinds, pricing power, operating leverage. Other early 24 areas of concerns have revolved around heightened scrutiny surrounding select big tech names and themes, ramp up in geopolitical tensions, and buyback blackouts. Activity expected to pick up next week coming out of the recent holiday season. In addition, CPI highlights the U.S. economic calendar on Thursday, and several big banks kick off Q4 earnings season on Friday. Disinflation traction and benign pace of credit normalization, some of the key components of soft landing narrative that have prevailed in 23 as 23 progressed. There's also several important conferences next week, the ICR, JP Morgan Healthcare Conference, and CES. These conferences are likely to provide more color on key macro and market themes as consumer resilience and GLP-1 drug and AI proliferation take hold. Ba-da-bop-bop-bop. We got a lot of headlines still. Taiwan CPI for December comes in firmer than expected, including 2.71 headline versus 2.9 and 2.43 versus 2.3. Beijing is formally asked some money managers in China to prioritize the launch of equity funds over other products like bond funds. Four sources with direct knowledge of the matter said, as authorities scramble to revive the lagging stock market. China is launching an anti-dumping investigation into liquor products like brandy from the European Union in a relatively modest step after the bloc opened a probe into the last fall into electric vehicle subsidies. Biden planning to retain most of Trump-China tariffs and will increase them on EVs and certain critical metals like cobalt and lithium, while cuts could take place on certain consumer goods. Huawei's newest laptop runs on a 5-nanometer chip made in Taiwan, not China. A Tech Insight teardown found the chip made by TSMC, countering speculation that Shanghai-based SMIC may have achieved another leap in fabrication technique. Tesla recalled virtually every car it sold in China due to issues with driver assistance autopilot as it increased the risk of crashes. The car maker will deploy an over-the-air software fix to more than 1.6 million vehicles produced between August 2014 and December 2023, including locally built Model 3s and Model Ys and imported premium models, State Administration for Market Regulation said. EU inflation mostly in line with expectations, including December headline CPI 2.9 versus 2.9 expected, December core 3.4 versus 3.4 expected, and November PPI negative 8.8 versus negative 8.6. Fundraising by U.S. venture capital firms hit a 6-year low in 2023, an ominous sign for startups with dwindling cash reserves and fledgling businesses relying on such a backing for survival. The $67 billion raised by U.S. VCs in 23 is the lowest annual total since 2017 and represents a 60% drop from the $173 billion raised in 2022. The peak year for Fed fundraising, according to analysts by private market data, provided PitchBook and National Venture Capital. Costco reported core December comps 8.1, about 80 basis points ahead of the street, including U.S. 7.4, 40 basis points ahead, and Canada 11.9. This is ahead of plan. Goldman estimates the payrolls. We already got that. Still a little bit more. Economists see softer December payrolls bolstering case for Fed rate cuts. That didn't happen. Eurozone inflation accelerated in December for first time in 6 months. U.S. 30-year mortgage rates tick up slightly, first rise in 10 weeks. Spread between 30-year mortgage rate and Treasury benchmark has narrowed for 8th straight week. Global chip demand seen returning to growth by quarter 2. BTFP borrowing hits new record high as drop in borrowing costs offers arbitrage opportunity. St. Louis Fed appoints former New York Fed executive Alberto Musalem as president. Markets see Bank of Japan moving more cautious following this week's earthquake. Markets see growing bets of further PBOC easing in 24. Latest flow data shows investors poured $123 billion into money markets. Traders make aggressive options bet on spike in Treasury yields following December payrolls. Yen seen pulling back further as markets adjust expectations for rates in U.S. and Japan. Short sellers accumulated almost $195 billion in paper losses last year, erasing some 2/3 of the $300 billion made during 2022 market sell-off. OpenAI are talking with dozens of publishers about licensing deals for their content. Amazon captured nearly 30% of all final orders online in holiday shopping. McDonald's CEO says Middle East tensions will have meaningful business impact. Mark Zuckerberg sold nearly $500 million in Meta over the past 2 months. Latest EIA stockpile data shows that fuel stocks are building substantially. EOG Resources expects U.S. crude output to grow at less than half of 2023 pace. Biden administration moving away from moving to keep many of China's tariffs. Trump-China tariffs still considering lowering duties on some goods. Blinken heads to Middle East amid Red Sea crisis and attack in Iran. Islamic State claims responsibility for deadly explosions in Iran, which killed nearly 100. Israel defense minister says no plans for Israeli citizen control of Gaza following war with Hamas. Houthis ignore international warning and detonate unmanned vessel in the Red Sea. Washington says North Korea provided Russia with ballistic missiles and launchers for war with Ukraine. And then Bitcoin remains volatile as investors await announcement about possible ETF approval. Wow. It's a lot of news, Chad. We still got some plays, though. We still got some plays, baby. Let's see what we got. Trading higher. This might be a little outdated considering the back and forth move that we had, but if it has really associated news, I would keep that one in mind there. But WPP, they're up 2.9. Cantor Media up for sale LSXMA up 2.7, DT up 1.5, Jefferies upgrade, STZ up 1.3 off of earnings, CVS 0.1, guidance buyback, interim CFO appointed, Peloton up 6.9, follow through on TikTok partnership, VTEX up 5.1, Morgan Stanley upgrade, Aurora 5.1, development milestone, Afira 4.6, guidance preliminary Q4 Lupkinis metrics. Beyond up by 3.7, need him upgrade. AMLX 3.2, ELAN up by 3 off a Stifle upgrade. KYMR up 2.7, 2.25 million common stock offering at 25.25. TGI up 2.7, Barclays upgrade. Herbalife up 2.6, Boo up 2.1, UBS upgrade. MNDY up 1.8, Jefferies upgrade. OCFC up 1.6, Raymond James upgrade. IMUX up 17.5, 240 million private placement. Upcoming milestones. FlyX up 14, PXLW up 13.3. B-Fly up 12.7, FUSN up 10.9, program update, ANNX up 9.8, AXGN 8.1, preliminary revenue and new chief medical officer, DZSI 7.9, 25 million private placement to divest Asia business, AMPX 4.8, SLGC up 4.1, stockholders approve merger with SomaLogic at special meeting, ALT up 3.5, IMNN up 3.1, LFMD up 3.0, FFWM up 2.9, Raymond James upgrade, KOPN up 2.8 to collaborate with McLED on micro LED or LED displays. Is it MCLEDI? I don't know. Micro LED. CVAC up 2.1, phase 2 interim data of COVID vaccine development program, trading lower, Palantir down 3.3, Jeffrey downgrade to underperform, Work down 2.5, Allied down 2.0, Raymond James downgrade, Affirm down 2.0, Coin down 1.9, Okta down 1.5, Jeffries downgrade, DEO down 1.4, China Ministry Commerce initiates anti-dumping investigation into brandy from the EU, CNHI down 1.4, Hood down 1.3, PayPal BTIG downgrade, AGL down 25.5, guidance CFO retirement, MPW 20% down, Steward Healthcare update, KeyBank downgrade, CPRX down 13%, 150 million common stock offering, DYN down 5.5, 17.2 million share secondary offering at 17.5, Tilray down 2.6, Zuo down 2.4, BKE 2.2, UBS downgrade, AU down 2.2, Nova down 2.0, GIL down 1.5, UBS downgrade, APLT down 28.5, study results, ALLO down 21.8, program update, TBPH down 19.8, phase 4 Upalari PFIR study results, ANGO down 16.3 off of earnings, VYGR down 16, 7 million share offering, Mobex down 14.0, KORE down 13.9, profit taking after a 60% gain yesterday, BLND down 5.9, MTC down 5.3, and MRSN down 3.9 off a business update. Wow, yeah, you've gone break even now on the market. My goodness. My goodness, Chatadonia. So my plays are going to be pretty simple. Maybe I'll wait till I'll wait till I give you your plays, and then we'll go over it, man. We'll see. Let's see. But give me a second. I need to go to the bathroom real quick again. I've been down in water since like 4. Please hold.
10 days out from the first real state contest in that race. The Iowa caucuses are coming up next Monday. Trump holds a lead. He's above 50% in most polls there, while Nikki Haley and Ron DeSantis are roughly neck and neck in the high teens. So that is why they were trying to make their cases in that CNN town hall last night. It was really interesting, Manis, to see them not so much go after each other as they really have been for this entire campaign, but to more directly go after the frontrunner in Donald Trump. Nikki Haley was talking about how chaos follows him and the country won't be able to stand another 4 years of chaos. And Ron DeSantis actually went after him on specific policy, from the border to spending to even the issue of abortion. So clearly they are trying to cement their place as number two, as it is highly likely that Trump is going to win in Iowa. But of course, we're all waiting to see if a real contest can happen after that, Manis.
Yep, Kelly, I think you've summed it up, which is, which of the two of them can put their stake in the ground as a credible alternative against Trump on the ticket. Kelly, thank you very much. Kelly Lyons, getting ready to go on the campaign trail. Joining me now to discuss the markets and politics, it's iCapital's Anastasia Amoroso and PGIM's Michael Collins. Good to have you both with us. Here we are, a hot report, 216,000 jobs, wages are rising. This should, in theory, play well for Biden. Anastasia, he needs this because he's lagging in the polls. How does it play out? Good morning.
Well, good morning to you, Manus. I mean, obviously, it is positive news for the economy and therefore for the president that we got today. I mean, you're absolutely right. The jobs report was absolutely hotter across the board, whether you look at wages that were higher, than expected, whether you look at the number of jobs created, and of course, the unemployment rate at 3.7%. So that's definitely good news for the administration, for the economy, I think for anybody in the jobs market. But from a market perspective, of course, we're concerned about what does this mean for the Fed. And I think the very initial interpretation is, well, that likely means that the Fed does not actually cut rates. But I think that's a premature conclusion because, Manus, there's a lot of other developments on the macro front that we got this week that, to me, actually suggest that there is a rebalancing happening in the labor market. For example, the job openings number has actually come down to 8.8 million. From the peak of 12. We also got the ISM prices paid index that declined more than expected. So you put that together with the inflation print that we're likely to get next week at 3.8%, excuse me.
We're already tying it into CPI, but man, you're up so far. Very interesting with, again, throwing away the rate hike odds. I got to double check the ZQ. Everything bounced though. So literally from like gold, even oil, even rate cut odds in December started to chill out once again. So Chattadonia, I hope you're ready for it. I want to hear about your plays. Let's get through your plays. We'll have time for questions. I already know the number one question of the day beyond the non-farms, but Chad, you got to hear everybody. You got everybody switching up their minds. You got the BLS revising like it's nobody's business to balance everything out, man. Tell me, what is your first play of the day? Post it in the chat. What do we got? Oh, there you go. It's already coming out. SPY calls. Apple and SPY. Nike, January 119. Paper Trading Boyle, Nat Gas, Allen's a Genius, SPY Dailies, MPW, Goldilocks Crackheads, Coin Calls, MPW calls, 0-day SPY puts, Boeing puts, SPY call, Coin Calls, Long ES from 4702, Coin Calls, waiting, AMD, NVIDIA, Beetle calls, Coin Calls, JP Morgan, Ghetto Spread, 240, MPW calls, Meta, SPY puts, Short Redfin, Tiva put, Scaling MES, Zim calls, Palantir, NVIDIA, MPW 3.5 puts, MPW calls, waiting for the week, SPX or NVIDIA, Ford puts, sell NVIDIA, ARCs, 2 standard deviations, going long, small cap growth, should have already told, screaming that 10%, Clean Spark, NVIDIA, Apple shares, oversold here, bulls really want to do the buying, let's go, MPLW, averaging down, scalping, Meta puts, SYM, AMD shares, AMD calls, closing puts, TQQ, Zim puts, Meso, you're out, Bill, we got to get you out, bro, I'm sorry, God bless you, I didn't even time for Chad Facts, AMD calls, inputs, D's. You guys are crazy. Outlet, ELF calls, SPY calls, Sox S, SPY puts, puts on MPW, SPY puts 468, charge point, reload, BLBD, shares, patiently waiting, TNA, Zim, Sox calls, coin long, striker for the long term, puts on the whole damn market, sell the calls, SPY puts, one love, Josh, shorting Bitcoin, do nothing, already bought MPW shares, averaging down, already bought a bundle of MPW, waiting for Monday, ASML, bull puts, buying Mara, TQQ, The Rock at WrestleMania, sell everything, long-term, Pfizer calls, and the final plays. Microsoft defense puts at ISM, long on Uncle, and USD MXN short. Ooh, we gonna end it on a currency pair. Okay, wow. So on that note, here's the deal. One piece of my chicken, you gonna call Dr. Phil. Some of y'all don't know that song. It's a classic. It goes back in the day. I'm gonna be watching Baidu and Baba. So like literally, I was just telling you guys on the watch list about China. You're already getting a Wall Street pump. So literally, Bloomberg put out an article today saying there's an indicator that hits 100% of the time on producing a Chinese return. So that's one area. I'm still in those plays. I'm going to be watching out for that. XLV, IBB. Like I'm saying, with how today's played out, I would keep an eye on any of the outperformers. And then I will watch bonds. If they've run up too much, we might be able to short them again. And then I'm going to be watching, again, TLT, ZB, and then I'm keeping an eye on gold. And that's going to be it. I do not have MPW on my list. So I have 2 minutes to go over it, and then we're going to get into the pledge. But like I said, at the top of the hour, I will go over MPW because everybody is going to be asking me, but I have good news, bad. Actually, I only have bad news for MPW. The good news is we didn't average down on it as of late, so we didn't get caught up in it. But MPW, what they announced yesterday was pretty bad. Pretty much what they said is that they're going to try to aggressively get the money back from Steward. That is their troubled tenant. And they say they're going to try to get the money from them faster. However, by doing that, they're borderline admitting that Steward is about to go BK. So that means their biggest tenant is about to go bankrupt. That's pretty much why people sold off the stock 20%. But what's worse than your biggest tenant going bankrupt? Does anybody know what's worse than your biggest tenant going bankrupt? There's something worse than that. It's when you determine that they're about to go bankrupt and then you give them another $60 million. No. That's what, literally, I like I told you guys, I was saying it from that last earnings, bro. Management is fucking shady. Unfortunately, I do like their assets. Again, it's about $72 million of like a total of like 200 million getting billed. So it's like they still make money from other stuff, and I do like their portfolio. However, bro, management is doing some fuck shit. Excuse my language, but that's why everybody's freaking out. You know, sounds like an accounting move. It could be, but either way, they keep doing it. But it seems like they're both trying to pursue somebody that they've given credit to and get the money back. But at the same time, like I said, this was my issue last time. Last time they had good earnings, they came out and they said, oh, but we're going to give them this loan and do it once again. So, yeah, they said I can't pay my rent, and they said here's another $60 million. Pay us back quick. It's not a good sign at all. But that's why people freaked out. Again, that's exactly why it's down 22%. We'll go over this a lot more, but screw MPW. Something's more important. And it's America, baby. And it's the reason we're here today, bro. Honestly, we get to talk all day. We get to argue with each other. You get to go back and forth. You get to make decisions. Nobody tells you what to do. And it's because you have freedom. And the reason why we have freedom is because of a very special group of people. And that's why here at The Cult, before we do anything, before we try to chase a dollar, we must pay homage to that very special group of people that has made the ultimate sacrifice, and a sacrifice that most of us never have and never will make to any degree. So the people I'm talking about is the veterans of the United States of America. So on behalf of The Cult, man, all the veterans, active servicemen, past servicemen, anybody who has served this country, for real, thank you for your service. Thank you for your dedication. I hope you know you are loved and appreciated by every single person, man. You know that? Because some people get mad that we do the pledge, but you know everybody in here holding it down, bro. We really do love and appreciate you. So veterans and the families, man, thank you, thank you, thank you. God bless all of you. And big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the garbage men, the janitors, the coaches, you helping out, giving back to your community, baby. That's how things run. So let's go. God bless you. But ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send to the Jets! Oh, it's game time, baby. Or no, let's go. Oh, Chattadonia. Still surprises. BLS do revisions, and it took you like 10 minutes. The crackheads are already out. We're green. We are green again. This is crazy, bro. This is crazy. Oh, my goodness. So, Chattadonia, we got about 1 minute until the bell, till everything opens up. Everybody goes crazy. So, tell me, my friends, did you like the video already? Did you make sure you're subscribed? Are you ready or not, man? Ready or not, man? You got something for me? You got plays, news, anything? You let me know. You post it, but let's have a good one. the rate cut probability, it's moving around. I think it's back to 50%. December cuts dropped, and it's almost right back to where we opened up in the morning. So I'm telling you, everything reversed. So literally right here, rate cut odds went from like 60 to 40, and now everything's right back to 60%. Even the December odds came back up a little bit. It's actually pretty wild. So this is, yeah, it already pumped. It would have been nice to sell that ES on the low and then hold out the Russell, but for the most part, I mean, you do have the crack. Everything. Gold dropped to 2030, back to 2015. Oil rocketed. Oil, it was the only thing that didn't drop. It just went straight up. And again, the dollar, even the yen had a drop and then came up, but it's still negative on the day. But literally, everything got bid up automatically. So watch out. This could be the top, though, in a weird way. And again, by the first hour, we'll either round one, fight. So literally, by first hour, we'll notice if it's either one way up or if we're going to do the volatility, and then literally just watch till after Euro close. And then we'll go from there and see how everything plays out. Yeah, the ES was good. It was up at like $3,000 in the morning. That's why I was like, shit, that might be good. But then I was like, oh, if I want to hold the Russell, though, it'll give us some time, though, because think about non-farms. Because whatever happens today, if any of that gets reversed, or not non-farms, CPI, we might just play this game for a little bit. But like we were talking about, maybe we get our first positive day. And there's MPW down 20. We'll go over that again for you guys in 30 minutes if you already missed the explanation. I don't think I'm going to average down on it just yet, but they do have earnings coming up. And then SPX, I mean, you're literally right off of the lows of yesterday. So, again, barely up there. Again, SPY's barely green. Russell is actually Merck there. So, again, rate hike odds have literally stayed almost unchanged here. But then the Russell is the one taking the beating. SPY, everything else is finding a way to hold up for now. Bowen straight to the top. No play. TLT, I want to wait if it bounces, actually. I mean, maybe, actually. You could go for the, where is it? You could go for the short on TLT. It may not be that bad. I wouldn't be too against that idea. We're at, 4.089 now, I think. Let me take a look. Chips are ripping. Walgreens drop. Pfizer drop. Let me take a look at the 10-year. Again, I'm looking at the actual 10-year. It's at 4.04. There's a little bit to squeeze out of it. There's a little. Again, I like the downside on the bonds for the most part. The risk is trying to trade it off of the morning. Where is IEF? IEF is barely moved. That might be a better play. So instead of ZB, the ZN. But it's moved down so much. If the crackheads get in the way, that'll be the only problem. So let's see. I'm going to keep an eye on that. Again, gold, too, if it comes back. But I can't believe gold just did that. So let's see how it plays out. The CPI is going to be on Thursday. And then, again, watch the dollar. I do think the dollar will guide us. Again, Tesla had that bad news. Where's Bidunius? They were up. And then Baba. Delta Airlines on the high. Watch any other travel plays. Again, they did good on the employment side. So we'll see how that plays out. Yeah, I think that's why Airbnb's up too. I think all of the travel plays, I know Uber was going up as well. So we'll see. Give it a second. Decent pop on. I'm looking at a couple plays. Disney flip green. Nexi Holton. PayPal on the high. They got a downgrade. And they're up off of that. Again, MPW still getting murked there. Again, we're going to go over that one in a little bit. But I think a lot of you guys are playing that one now. Even beyond whatever is in the long term. And then Boeing is going straight up. You guys are saying chips. NVIDIA's up 1.25. Dude, there's a lot of things up, surprisingly. So, again, Russell's the only thing getting beaten down. SPY is in the green. NASDAQ in the green by 0.07. And then Dow Jones is also holding up, too. 4 minutes. All right, ES is still rocketing. Again, bonds lower, SPY higher. This is going to be an interesting dynamic. That's what I'm taking a look at there. And again, I have an eye on gold too. SoFi bounce. Let's see. Again, gold at 20. That would have been a killer move there. SPY's literally just going vertical on the futures. You've gone up like 25 points in probably about 30 minutes here. So again, the market's only been open for a couple minutes, but you are still just like take a look at extended hours to give you an idea. Now we are going up since the data. So again, this is going to be a weird first reaction because no matter what the data said in the narrative, I think some people are leaning on, well, it's not fundamentally changed, but for the most part, I think you just got the event risk out of the way. And then watch the banks. I'm seeing Wells Fargo on the high. Yeah, all of the banks are starting to move. We could go take a look at the JP Morgan plays in a little bit. Check the regionals might be clapped. Actually, regionals are up. So again, even Russell's starting to pick up here a little bit. Humana
order filled.
Down 1.9. Yeah, healthcare is not the outperformer. So we'll see if that ends, or again by the middle of the day if we do flip. Watch out if healthcare kind of becomes a leader there. The data, I think it was pretty bearish to a degree, or a slight bearish tilt, but my idea is punt. So, like, in a weird way, it's either we get, again, like we're saying, 4 days in a row, maybe we get a lucky green day, but I kind of just think we're going to be in a wait-and-see mode until we get into next week's data. But, again, people are kind of this one ramped up pretty quickly considering all of the surprises that were contained. Punt is bullish. Well, it means nothing died. But then again, you know, the dollar and just the nature of how we started this year. Again, dollar's actually about to go negative. So as long as I could stay negative, we might have a good sign there. Next week puts will hit 10K. Hold on. I'm still in that ES, but like respectfully, I don't trust you no more, man. You know what I'm saying? You told me it was going. I had to pay $3,700 before I went up 1,000. So I don't, like, you know what I'm saying, man? So post your play that you got, but you know, stop hitting us with the like. He's gonna do that, you know. I'm just saying, you got, because then you abandoned me last time. I was looking for you, and then you abandoned me, man. Microsoft going straight up. MPW we will cover at 10 a.m. at the top of every hour, since it's just way too difficult to field MPW questions every 2 seconds. So I got you, but you guys are going to have to wait a little bit because I don't think we could spend all day talking about it. I could put it up on screen, though, down 27. And then Baba Baidunius. Meta's going to come up here. Meta's actually up by 0.5. Where's Amazon? Remember yesterday, they're up by 0.82. Nice ES pop. Again, after it looked like it was going to give up a little bit. And then oil is just running. It's kind of calming down, though, but they're up 1.8 on the day. Gold is chilling out. I can't believe the Zaza bounced like that. So, again, rate cut odds just died, and then I don't know if people want to put that one to rest just yet. Maybe unless they're getting worried about the recession. Where is it? ZN. I'm still going to look at that. ZN and ZB. Again, I think bonds might move around a lot. Again, they were already down 1% and rebounded. So it's either they continue or if they do make a flip. Meta again on the high. Meta's actually killing it. Roblo and Snow, I've seen that a couple of times. I'm surprised nobody's talking about coin. Again, coin and crypto, I do think we are supposed to get some updates today, or at least that's what some people were forecasting. Walgreens. Again, you can look at those plays from the other day. Yeah, Walgreens back down to 1.8. Pfizer's trying to come back up here. Abivi's on the high. Baba Baidu. I'm in coin. Yeah, they're chill. Again, they're only down by 0.45, so maybe that one might start moving with things, and then the news comes out, and then everybody will do their thing. But that news may happen at the end of the day. But again, that is a big part of it. Amazon's up by 0.8. Again, they were still down 2.5 yesterday. It's weird. I mean, where are we level-wise? And then bonds are going lower still. So you're right back to 4,700, Chad. So let's see what happens next, okay? So remember, yesterday we flushed the 4,700, the solid number. Remember, this was your pump it up. So we'll see where this takes us. Some of the bonds are already coming back down. NVIDIA going crazy. Again, wait for Euro close, though, too. Yeah, that one will be, I think the whole market. And then we got to watch out the dollar. Dollar's still holding up. It was about to go negative. So much
order filled.
Catadonia. Mahalo, Josh Chaz. Good morning, Todd. Amen, baby. Amen. Nice recovery on Apple. SGD up 50. Is that this? Literally SGD. Safe and green. Why the Q's option strikes are wild. I didn't hear much about it. I don't know. What do you mean? What do you mean? I didn't hear anything crazy. Who did you just pick up again for the LT? Alibaba. Yes, I grabbed 85 shares at $74.60. So now we're down $1 after shooting up $2 after buying it. Welcome to Winnie the Pooh land. What? You can't say it. Okay, I'm disappearing. What? All right, spike kind of coming down here. Yang on the high, so China name's kind of dumping here.
Order filled.
But again, you're coming right back down. I kind of want to keep the extended hours up. Remember, this is where the data came out. Literally by 30 minutes in, you recovered to break even. And then 15 minutes at a time, you pretty much ran your way up. Let's see. So just keep in mind 466.41 on the SPY. That's when the data came out. So it's still, again, about 1.4 points from where we're at for now. United Steel on the high. Are those coal and like even random commodity plays going up? Again, oil is, it's been chilling from the morning, but it's still holding up a very big gap. The Q options, 396.78, 397.28. It could be because of the, what's it called? It could be like unstandard options, but then again, I do think when they do some of the rebalancing, sometimes that happens. Try a different date. If you go through different expirations, maybe it'll level out, or at that point, there's nothing to do